Global markets rally on Fed cut hopes, but yen's slide sparks intervention fears. The financial world kicked off the week with a sigh of relief as stocks climbed, fueled by growing optimism that the Federal Reserve might cut interest rates in December. But here's where it gets controversial. While traders are pricing in a 57% chance of a 25 basis point cut, policymakers remain divided, leaving many to wonder if this optimism is premature. After a turbulent week for global equities, driven by concerns over sky-high tech valuations, Monday's trading session in Asia offered a much-needed breather. MSCI's Asia-Pacific Index, excluding Japan, rose 0.4%, and South Korea's Kospi gained 0.7%. Even U.S. futures markets joined the party, with Nasdaq and S&P 500 futures up 0.64% and 0.45%, respectively. And this is the part most people miss. The latest rally was sparked by comments from Fed policymaker John Williams, who hinted that rate cuts could come in the near term. Goldman Sachs chief economist Jan Hatzius doubled down on this, predicting not just one, but 3 cuts by June 2026, bringing the fund's rate down to 3 to 3.25%. His reasoning? Favorable inflation data and a weakening job market, particularly for college-educated workers, could force the Fed's hand. But it's not all smooth sailing. A record-breaking U.S. government shutdown earlier this month has left policymakers scrambling to fill data gaps, muddying the outlook for rates. The cancellation of October's consumer price report due to the shutdown only adds to the uncertainty. Meanwhile, the yen's slide has markets on edge. Falling 0.2% to 156.72 per dollar, the currency is hovering near a 10-month low. Traders are bracing for potential intervention from Japanese authorities, who are under pressure to prop up the yen amid concerns about the country's fiscal health and low domestic rates. Finance Minister Satsuki Kochiyama's recent warnings seem to have temporarily stabilized the currency, but experts like Sakshundi Suppert of Maybank argue that intervention might only slow the decline, not reverse it. Here's the million-dollar question. Can Japan afford to intervene in the currency market, and will it even work? Takuji Aido, a government panel member, believes intervention is possible, but the cost and effectiveness remain hotly debated. Elsewhere, the dollar held firm despite Fed easing bets, keeping the euro near a 2-week low. Sterling treaded water ahead of the UK budget announcement on Wednesday. In commodities, oil prices dipped slightly, with Brent crude at $62.46 per barrel, while gold fell 0.3% to $4,054.19 an ounce. As the week unfolds, all eyes are on U.S. retail sales and producer prices data, as well as the UK budget. But the real question lingering in trading rooms is whether the Fed's December decision will live up to the hype, or if markets are setting themselves up for a fall. What do you think? Is the Fed's December cut a done deal, or are markets getting ahead of themselves? And will Japan's yen intervention, if it happens, be too little, too late? Let us know in the comments.